Hello, everyone. Welcome to the Shabazz Omen CPA podcast. Today, we're going to be talking about how you can use bonus depreciation for your small business to create NOLs. Bonus depreciation is a very valuable tool, and I think it gets overlooked because a lot of times in the market now you hear Section 179. Everybody's talking about, oh, I can, I hear this TikTok says I can use Section 179 to deduct this car fully. Well, yeah, that's great and all, but a lot of businesses are limited based off of income limitations and threshold limitations. And so that's why, we recommend actually using Section 179 and bonus depreciation. Clesson, do you want to elaborate a little bit more on, the usage of one and or other and using them together?
Yeah, I mean, I think you said it best. The biggest limitation that comes with Section 179 is that you are limited to the taxable income your business generates. So you can't use Section 179 to drive a loss in your business. Whereas with bonus depreciation, there is no limitation to how much you can take besides the applicable percentage by year. So in this year for property placed in service in 2024, you're allowed to take 60% of the cost of the asset as depreciation in this year. And it descends each year. So next year you're only allowed to take 40%, and the year after you're only going to be allowed to take 20%.
So, for example, consider a business with income of 600,000 and they're acquiring property of $2 million in 2024. For 2024, the maximum Section 179 deduction is 1.16 million. In this case, the business has an income of 600,000. So the Section 179 deduction is limited to 600,000. If you use bonus depreciation, you are able to take the rest of the basis. So if you already took of that 2 million property, you took 600,000 in Section 179 right away. So you have 1.4 million left in basis. Well, you can use the rest of that, the bonus depreciation rate, which is 60% against against the remaining basis. So that would be $840,000 of an additional deduction with bonus depreciation in that year. So in this example, you were able to not only go above the Section 179 deduction, but you were able to create an NOL for your business. And it's a very unique tool in that sense, Section 179 has always, kind of been a limit in that sense. But with NOLs, you're definitely you're in a good spot there.
And just to touch on this real quick, there is an order you apply these rules in. So you start, like Shazib said, you start with Section 179. You take that depreciation as much as you can to the limitation, and then you take whatever bonus depreciation you can off of the remaining cost. And finally, if you're left with any depreciable basis from those assets, you can take general normal depreciation on that remaining amount.
Yeah. And I guess like for the viewers that are thinking, like, hey, what is eligible for bonus depreciation? Well, if you're a dentist, think of dental equipment, X-ray machines, dental chairs, sterilization equipment, your computer software, your office furniture, any improvements you do in the building. For restaurants, you could think of kitchen equipment, point of sale systems. Think of Clover. Think of whatever you're using in terms of your software there. Furniture, any fixtures, tables, chairs that you use on a daily basis, leasehold improvements, renovations that you might do, adding new lighting, flooring, whatever that is for the restaurant. And for our folks that have gas stations, think about fuel pumps, think about tanks, piping, convenience store equipment, signage that you might just want to get, and any improvements you might do inside of the building. There's various deductions there, and I think it's very unique for small businesses to opportunity to take this and be able to not only use Section 179 but also use bonus depreciation.
Agreed, fully. And essentially, what this boils down to is you can use Section 179 or bonus depreciation on any type of property that isn't real estate. And some of this property, like the leasehold improvements you were talking about, they can't normally be assessed. They'll be assessed as part of a building that they're a part of. So oftentimes we recommend our clients to get a cost segregation study to unlock. Basically, an engineer will come in and assess a property and say, this is personal property, this is part of the building. That personal property, you'll be able to use bonus depreciation and Section 179 against and really unlock the savings that depreciation will bring you.
Yeah. Well, if you guys enjoyed this podcast, we will be continuing to issue more content, more deductions, more savings for your business. Please keep in touch. Please look out. And thank you so much for joining.
Yeah, we are Shabazz and Almond CPAs, your partners in profit.